backing and whom is largely going under the radar. We'll present the facts, the data, the strategy, as well as the risks, and let you be the judge. And in return for all the work that goes into making a video like this, the only thing I ask is that you hit that like button, and also don't forget to subscribe. When you do those things, YouTube goes and pushes this video out to more folks, which helps us out tremendously. And as always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas. Okay, so we got to start with UNH, United Healthcare. So this is one of the best buy and hold and forget about positions in the market right now. And UNH's recovery trend has been one that we've been preaching for a while. If you go back to August 13th, we did this deep dive on why UNH was set for a massive recovery, and it then proceeded to run from the 260s 360s at this month's highs. But the thing is, folks, that most of the upside is not even realized yet. This is what I sent out to the Discord. UNH's recovery trajectory shows substantial opportunity in the bull case for the patient. Now, the recovery is not going to be straight up. It never is. But the bull case for UNH is pushing us well above $450 in 2026. And likely the long-term bull case beyond 2026 is pushing us well above all-time highs deep into the 600s. So what is the fundamental case for UNH to recover so fast and to go so high? Keep in mind, this company is number one in U.S. health insurance. United Health is the largest private insurer in the country, covering 53 million people. That scale gives it unmatched bargaining power with hospitals and drug makers. It's also a Medicare Advantage leader. UNH is the biggest player in Medicare Advantage with more than 7.7 million members. As baby boomers age into Medicare, this position is a huge growth driver. Now, beyond seniors, United Health has deep penetration in both employer insurance and Medicaid managed care, giving it exposure across all age and income groups. Now, their Optum division widens their moat quite a lot. Optum serves 100 million plus customers through pharmacy care and data services, making UNH not just an insurer, but also a healthcare services giant, which a lot of people don't realize. And most importantly, this company is really hard to disrupt. I mean, with its size and brand recognition, well, UNH is usually the default choice for large employers and government contracts, making it difficult for smaller rivals to take a meaningful share. Their guidance is back on track. United Health hit pause on guidance earlier this year, but they've now brought back their 2025 forecast. That tells investors the business is stabilizing and looking ahead to growth in 2026. Stock sold off after medical costs spiked, but United Health has repriced its plans and reset expectations, and they've set up for a comeback as earnings growth returns in 2026. And so right now, that's why you're seeing such a beautiful rebound, and I think you're going to see a lot more into 2026 and 2027, and we've been right so far on this stock. Okay, TEM. We've been presenting on this all year, all the way back to the beginning of the year, actually, when it came out that Nancy Pelosi, the famous trader, took a position in it through options nonetheless. And as of this morning, it hit 97.79 at highs. Absolutely beautiful. Back in June, we were targeting this potential run, and we alerted 75 strike calls, and this is what we said about them. Tempus AI is rapidly emerging as a key player in AI-driven healthcare, leveraging its extensive data sets and advanced analytics platforms to personalize cancer treatment and precision medicine. With increasing adoption across leading hospitals, pharmaceutical giants, and research institutions, Tempus is positioned to capitalize on the rising demand for data-driven healthcare solutions. Recent growth has been impressive, marked by partnerships with Mayo Clinic, Stanford, and Pfizer, underpinning solid revenue visibility and growth prospects. So here you had a little company that was partnering with all these big dogs and showing huge proof of concept in all these partnerships and in their reports. We also highlighted a ton of other very powerful growth drivers for the stock, including accelerating adoption of precision medicine and AI-driven treatment planning, significant partnerships with top-tier hospitals and biopharma companies, strong pipelines of new clinical products and analytical tools set for launch, growing regulatory support, analyst optimism, where analysts are actually targeting $90 to $100 for this stock. And so anyways, net and in effect, this stock absolutely blew through our projections, probably Nancy Pelosi's projections, and analyst projections within a very short time frame, relatively speaking. So massive congratulations to everybody who saw upside here. Okay, next, data center plays. So as you know, I've been harping hard on data center plays because there's a mountain of cash going into data centers from all the big tech players looking for computing power. It's a race to get as much computing power as possible, and quite frankly, the big tech players would absolutely love to just use their own data centers, but there's such a shortage of appropriate chips, and it takes time to build out these data center capacities. And so in order to stay competitive, they're not just utilizing and building out their own centers, they're actually going and mega leasing available centers. centers. And so a lot of small data center players, largely from the crypto mining space, are now pivoting very, very aggressively to servicing this demand. And the ones that are doing that effectively are seeing huge contracts and leases and are basically becoming AI landlords. Any solid data company with NVIDIA GPUs behind them is probably going to get a big contract, and that's been the whole thesis behind our data center callouts. They say a rising tide lifts all boats, and so these data center players are seeing huge upside being realized. Now, for context on a specific one, we were screaming APLD was a buy back in April at $4.53 because we saw this trend heating up. We saw her contracts heating up, and that same stock this morning hit almost $21. But that's not the only one. I mean, there's also IREN, which we've broken down on the channel, and she's doing great too. Wolf is doing great, and NBIS, which we've covered in the Discord. I don't think we talked about her on the channel, but we covered her in the Discord. She's doing very well too. Now, data center stocks have a ton more upside, but you have to be very careful because they are in a massive euphoria cycle right now, and they're going to be checked soon. They're going to breathe. It's going to be dirty, and a lot of people are going to be freaked out. But that's also going to be a huge opportunity. This is what I said about NBIS, but you could also say the same about the other AI data center plays too. Quote, NBIS looking overheated and set to push back to lower channel trend line. NBIS is an increasingly hot AI infrastructure play that builds and operates hyperscale data centers, providing GPU-powered cloud and compute services to enterprises and hyperscalers. Overall trend of business is hot. That said, chart needs pushback and should be on radar for such. So in other words, yeah, these companies are doing great, but you can't just be paying any price for them, and you certainly can't be chasing them. Again, a rising tide does lift all boats, but it's not like these companies have unlimited data center capacity. So you might end up seeing a lot of these leases and these lease catalysts start slowing down. And so the prices are going to normalize a bit. They're still going to see outsized growth, in my opinion, over the coming years, but they should start normalizing a little bit more. You're not going to see these 100% plus week over weeks anymore. As these data center plays come to maturity, well, you have to set your expectations accordingly. Bigger picture, risk management is key. Not thinking the stocks are going to go straight up. Buying at good levels and having realistic expectations is key. Okay, main entree. So there's a really hot energy trade emerging, and that's nuclear, and there's 4 big reasons for this. So why is nuclear so hot? Well, for starters, it easily supports energy-hungry artificial intelligence data centers. Everybody's always complaining that AI uses so much energy. Well, nuclear is the solution to that. It's a reliable 24/7 power. It's a zero-emission energy source, and new innovations and cost improvements are making it undeniably attractive. So as a result, you're seeing governments around the world pumping billions and billions of dollars to increase nuclear energy capacity, with the White House recently taking executive action to invigorate the domestic nuclear supply chain. Quote, U.S. sets targets to triple nuclear capacity by 2050. And that was actually when Biden was still in office. Trump, he's been a lot more aggressive. He just recently signed an executive order to amp up everything a lot more and sped up nuclear reactor licensing and basically destroyed many of the other regulations, slowing down nuclear energy expansion. And so all of this is why the nuclear asset class is exploding right now. No pun intended. Now, the context here is that, as you know, the federal government is taking more and more of an aggressive role in investing in private sector companies, partnering with private sector companies, putting massive tailwinds behind private sector companies. And we've been doing our best to call those out for you ahead of time, like with MP Materials and Intel, for example. And I believe we have a new idea along those lines today as well, specifically in the nuclear space. If you dig into this press release on the Department of Energy's website, it says this, quote, DOE announced the reactor pilot program in June of 2025 following President Trump's executive order, blah, 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 which reforms reactor testing at the department. The goal of the reactor pilot program is to expedite the testing of advanced reactor designs that will be authorized by the department at sites that are located outside of the national laboratories. Seeking DOE authorization provided under the Atomic Energy Act will help today's selected companies, and it names off all of the
Did you buy Okla, Stephen?
To unlock private funding and provide a fast-tracked approach to future commercial licensing activities. Now, here are the companies listed out for you. These are the companies that the DOE selected for the nuclear pilot program, which means there's massive tailwinds behind all of these companies. Now, all
right, let's jump into a little breakdown right here and get going. There's one stock that is about to skyrocket in the next few days. It has a connection to Trump through his first term. He's enabled some of the frenzied activity around this sector. It's Quantum. The stock is QUBT. Let's talk about QUBT. Let's talk about its peers, QBTS, RGTI, and IONQ, which have been going crazy and why QUBT is the quantum stock of the current moment. Let's jump into the chart right off the bat to make sure we know what is going on here. Here's the problem, right? Many stocks look like Oklo here. They've gone up a lot. It's been an excellent swing trading environment, and QUBT actually did that as well. However, it digested. People were talking as well about uranium stocks recently, LEU and UUU, another sector, uranium, which have been going crazy and pulled back recently. What happens is they do pull back significantly, and what can happen is they base again and give another opportunity. So QUBT is a great example of an opportunity like that, going back to this left side peak around $21.20 and change. And if we really scroll back here in a 5-year chart, we can see that there is this level that is visually relevant, $25.50. One above that, sort of getting there again. People have probably sold, okay? There's almost no volume there at all, but it does play a factor in just seeing how high this thing can go, okay? So once it gets above here and change, that's going to be pretty relevant. The number exactly is 2510, okay? So 2510, 2715, and when we look right here, 2510 is pretty much where it rejected, okay? So it does matter. It's not fun to talk about charts. It's not sexy. Maybe it is if you're a mathlete, but the truth is a lot of people look at the chart because everyone can agree on the prices. Not everyone can agree on how important what a company is doing is. But here's the Trump connection, okay? Look, there's no direct link, all right? But you have to agree that there have been policies that enabled this. These are the peers. It's kind of insane to think companies with no revenue. Sure, I mean, no revenue is not fair. Okay, Rigetti had $6 million from the U.S. Department. QBTS and IONQ is the one that absolutely went insane on the chart. We can see that here. Let's just quickly look at those. IONQ, okay, this move is 80%. Here's RGTI, right? Pretty similar, 150%. And here's QBTS, 85%. So when we look at QUBT, it's kind of the last one to go. Okay, it only went 50% and it pulled back, and it was offering a spot to get in. And it is very reminiscent of some of the drone plays that already gone. UMAC, for example, and RCAT was the last one to go. Okay, and it also offered a little pullback here to a prior left side peak and then went up higher. All right, did it retrace yesterday and today? I say yesterday because this is a green candle, but it's a significant retracement from the high. Yes, it did. But also the market the last couple of days has gone down. So, you know, the market is composed of stocks, and the littler stocks also follow the market as everyone sort of freaks out and sells. So I didn't really mean to make this video so focused on the chart, but the fact is the chart really, really matters here. And quantum is definitely, you know, on the docket for this administration. They are a very tech-focused administration with their AI and cryptos are, and all of the tech CEOs basically having dinner at the White House. It seems like on like a bi-monthly basis. So look, quantum matters for national security. Okay, if you can basically code break, you need a counter to that, or you need to create an unbreakable computer. I don't know. I'm not like a cybersecurity researcher, but I do know that There's a reason people are fanatics about this. It's just also true that, Jensen Huang himself came out and said that quantum was 20 years away. Now, he did walk that back, but when he did say that, that did, pretty much crush some of these companies. I don't remember exactly when he said it. He might have said it here. I can look into it, but it doesn't matter right now, okay? He did come around and sort of realize the effect that he had and walked that back. And since then, quantum has soared, okay? So this was sort of the initial connection to Trump, okay? 2018, more than $1 billion over 5 years to accelerate quantum research and development. Okay, that's the key words though. Research and development. So do we have to be buying quantum stocks and holding them forever? I don't think we can, or I certainly don't think it's a good idea. And I'm not even going to look up the revenue for this company. I mean, I guess I will, but that's not why people are buying QUBT. So it's sort of disingenuous to even use this as part of your research process. I mean, this is what we're talking about, okay? Not only did revenue decrease, but it's a couple $100,000, okay? So I don't even know why we're talking about this when there's $30 million loss and basically no cash. This is relevant, okay? That's a lot of money. And this is this month, okay? So they are getting money. It's just that I don't know that that's in and of itself reason to invest in this company as a retail investor. And if you are, having to allocate a multi-billion-dollar fund, sure, maybe you take a look at this and your fund, you get your distribution 10 years from now. But we're looking at, month to couple month timescales, if not less than that sometimes. So with all that said, I am, giving this as an idea because of this level being so important, around the $21, pretty much where it is here. This is sort of a little lower, but yeah, I think you can basically just look at this part of the chart, risk $1 and maybe make 5, maybe 10, maybe this thing will really get going here over this 27.15, which is all-time highs. So this is a speculative momentum play. Let's call it what it is. There is significant volume here, and it's at a very attractive spot to buy it compared to what you can risk off of, okay? And that's kind of what we're all about here, giving you opportunities, assuming you check your portfolio once week at least, ideally maybe a little more than that. This is sort of an opportunity that's useful for you. If you're just trying to buy a stock for the next year, I would turn off this video right now because it's a quantum computing stock. That's enough said. So if you like this type of stock idea talk, head over to stockscommunity.com. You can try it out for 7 days for $25. If you do join as of the release of this video, you will take part in that course member live stream tomorrow at 8 p.m. Eastern. If not, we'll see you when you see ya. And that is a weekly live stream. And of course, I'm in there every day answering questions. And I think the results have been pretty helpful with the ideas given so far. You can check some of the testimonials on that page, stockscommunity.com. If you haven't hit that subscribe button, hit that subscribe button wherever it is. Get notified of future stock idea videos, and I will see you in the next one.
This is Sam Putnam.
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 All right, let's take a look at some more Zip Trader.
Traded and or are going to be publicly traded soon, and those two are Okla Inc. and Terrestrial Energy Inc. Okla has already skyrocketed massively and is in a huge rally right now, but you see Terrestrial Energy is a little bit different of a story. It's actually not public yet, but it's going to go public soon through merger with a SPAC called HOND, which means you can actually buy that SPAC now before the combination, and once the combination happens, you'll own shares of Terrestrial Energy Inc. Now, if you're unfamiliar with SPACs, SPACs are essentially just a different way to go public. A SPAC is basically a blank check public company that goes and buys a private company and essentially merges them together. Because of the pre-merger, well, that means that the stock HOND is not really getting the love it deserves. The entity that it's going to merge with is actually a very big deal. If you look at Terrestrial Energy,
One
it
XP
stands
is
out
sufficient.
a lot more than the other players on this list anyways. It's going to become the first publicly traded nuclear play of its kind. For starters, it's a fast to market nuclear. Unlike most sci-fi timeline nuclear startups, Terrestrial's integral molten salt reactor, we'll call it IMSR, is designed for
Alright,
speed.
I'm literally
Modular, it's capital light, and it's using readily available
overheating
fuel
here.
instead of very scarce fuel that the competitors use. And they've already hit major regulatory milestones in the US and Canada. Number two, it has a monster TAM, total addressable market, estimated at about $1.4 trillion plus. Now, IMSRs aren't just about electricity. They actually deliver 585 Celsius industrial heat, which is very clean, very firm power for data centers and fuel for green hydrogen/ammonia. This opens a $1.4 trillion plus addressable market in OECD economies, which is potentially going to grow all the way to 1.9 trillion by 2050. Number three, competitive costs. Legacy nuclear is slow, expensive, single use. Terrestrial, while it's 50% more efficient, its levelized cost of electricity, LCOE, is at $69 versus $140 for legacy nuclear. They also hit coal plant level steam temps, making retrofits possible, and that means that 80% of US coal sites could be retrofitted to carry this type of nuclear. Number four, recurring revenue. We love recurring revenue. It's not a model of one-off sales, but actually recurring revenue. This isn't a sell a reactor and walk away type of model. Terrestrial earns from pre-construction, core unit replacements every 7 years, long-term fuel supply, and maintenance. That means multi-decade, high-margin revenue streams. Again, we love recurring revenue. Number five, policy plus partnerships equals big tailwinds. Governments, the US, Canada, UK have backed them with grants and regulatory progress. Partnerships with Westinghouse, Cameco, Siemens, Texas A&M, and more give them credibility. Plus, the US and really global policy calls to triple nuclear capacity by 2050. So again, mega tailwinds for this company. So we've just talked about Terrestrial, but is the SPAC that's going to be buying out this company a good buy right now? HOND. So what's the upside for HOND stock here? Well, the potential anticipatory run into combination with Terrestrial Energy, which looks like it's going to happen in Q4. The long-term upside as Terrestrial Energy expands with government and regulatory tailwinds, and also the likelihood that HOND is probably underpriced, as many people simply overlook or don't like to buy SPACs pre-merger. Now, what about the downside for Hound? Well, the merger date is still pending. It looks like it's going to happen in Q4, most likely, but it is still pending. There's also the fact that people often like to take profits right before and after mergers, causing dumps. And of course, SPACs simply just like to make people worry before mergers because they haven't merged yet. So they're always worried about holdups in the regulatory process and so on and so forth. That being said, bigger picture here, I expect to see anticipatory running into the merger, which is likely some months away, then a take profit period, and then a longer term play as this company builds out its reactors. Now, one of the things to keep in mind, though, is that the DoD put out a list of about 10 different companies, and they said that they're using these companies in a pilot program to build specific types of nuclear reactors before July of 2026. And so there's mega tailwinds for all of these companies, but there's also a shortage of options to actually invest in any of these companies. Since all of them but two are privately traded, well, that means that a lot of capital that wants to play off these government tailwinds has to go to those two. And Okla is already completely publicly available for buying, and as you've seen, the stock has gone up massively. And the only other one that's left is Terrestrial, which is going to be going public through HOND. And thus, I would expect folks that are trying to get an exposure to this DoD and government backing situation are going to go for either Okla or HOND or both. And HOND, unlike Okla, hasn't gone up much. And so definitely, I would say it's worth putting on your radar. Anyways, folks, that caps off today's video. Have a great rest of your day, and we'll see you next time. If you'd like to join us in the Discord and get our...
All right, guys. We do have a Discord at stockscommunity.com, and we do have our member live stream tomorrow at 8 p.m. if you do find your way in there. Try it out for $25 for 7 days. But right now, we are going to do a little bit of a breakdown here. Did talk to Steven in the stream about Oklo. I don't recommend Oklo right now. Needs to chill out for a little bit. The momentum was absolutely insane in the last few weeks. So that needs to relax. Let's do a breakdown, all right? There's one stock that is about to explode. This company is NVIDIA invested in them. So this isn't like a NVIDIA OpenAI circular, situation where you give me 100 billion, I spend 100 billion on your chips. No, this is actually NVIDIA invested in them, and they provide AI infrastructure for NVIDIA. So it's kind of the traditional business arrangement we would think. One company pays another. So let's jump into the chart and take a look at why now is the time to buy CRWV, CoreWeave. Okay, so CoreWeave is an IPO. So that's the first sort of chill out sort of piece of information. Okay, so you don't want to just pile into this and then just walk away and a couple months later check your investment. A lot like Circle, this price action has been very IPO-y, euphoria and then unwinding. I mean, Figma is an example of that on an accelerated time scale, but I think CoreWeave looks good right now, given this sort of marching up is not as beautiful as I'd like. Spotify, is an example of a company that just builds a nice base out for a long time. I mean, recently, the last couple of days have been kind of yucky. Everything in the market has gone down the last couple of days. But those are just a few examples. Spotify, Netflix, of some bases building out sideways. Sideways action is easier to risk off of. CoreWeave doesn't have that sideways action. It's moving up, okay? However, you still sort of have some levels here, particularly here. Actually, I shorted and then longed this little example bit here, but you go back even further to May, this level is relevant, $130 whole dollar level, and we're pretty much there. We hit it 3 times, you could say, maybe 4. So the idea, of course, is you risk $1 down to a level like that, and then you make 10, 20, you try to do something like that. Sometimes you're wrong, okay? Sometimes I'm wrong, okay? But when you make more than you lose, I don't mean you're correct more than you're incorrect. I mean, when you're right, you're really right. And in the last few weeks, we've gotten examples of what being really right, looks like in the quantum, nuclear, uranium sectors. There have been stocks that have just gone absolutely parabolic. Okay, and don't get me wrong, I'm wrong sometimes too. I said OfferPad could be a good stock to jump in after Open Door, and OfferPad never really got off the ground. Okay, but you did have an example to just get out, which is what we talk about. Okay, and this one didn't even unwind much, so you're wrong, and then those 3 examples, you're right. You're doing incredible. Of course, Open Door itself also unwound, which was expected, but the fact that it unwound so quickly probably didn't help its sort of sympathy ideas. So this was the other Open Door sympathy, and that one also unwound. So look, buying speculative stocks is speculative. CoreWeave is an example of a stock that is slightly less speculative than those real estate technology companies that are $10 stocks, right, or less. CoreWeave is an IPO, okay, recently, but it does have that NVIDIA investment, and I gave you that level, and it looks like it's, has some volume here, and it's moving up slowly, so certainly not something you want to short, and when you hear that, that's can sometimes be the recipe for a long idea. So let's get our head out of the lines and into, hey, if we just looked at a little brief on this, what would it say? And this is what it would say, okay? CoreWeave does GPU cloud services for AI, okay? Big contract with NVIDIA as well as that investment. NBIS, another NVIDIA-backed AI infra ticker, which is done super well. Also, almost $20 billion deal with Microsoft, okay? And NBIS, another one that certainly mooned. And that was an example of another one where it did go up, and then as it sort of pulled back, had these compressed days and gave an opportunity to get in, risking very little, and then skyrocket up there. So just giving as many examples as possible. Okay, sometimes you have those compressed days and it does not skyrocket. Okay, actually, I don't know exactly when we talked about this one, but to give an exact date on that, I actually do have the dates of every stock idea I've provided here so far, and these are the dates. So for this particular one, this was back on September 13th. The ones in black are the ones that, in my opinion, didn't turn out the way I described them, and the ones that are not in black, I think you did all right with them. So let's look at that. September 13th was right here. So yeah, so we talked about it here, and this 13th, well, I guess the 13th was a Saturday, so it's not going to show them at the chart, okay? But this is Sunday futures, and yeah, so this is kind of what I'm talking about. You can get out very quickly because these candles are only like 0.5% or so, or whatever they are, 1%, 2%. Not a lot. It's a large percent because it's only a $5 stock, but you get the idea. Compared to how much it generally moves, about 17% a day on average over the past 10 days, you know, we can see moves a lot. That gives you an opportunity to get out where you don't have to look at your phone, you know, once a day. You could maybe, you know, you're on Saturday hanging out with your kids or doing things yourself or whatever. And then a couple days later, Tuesday, you know, you can still get out and lose very little. And in fact, it didn't even start to go really down until almost a week later. So those are the kind of ideas what I'm trying to provide here. Back to CoreWeave though, this is the opportunity. And when we do look at this company, the big dogs we can kind of just ignore. Okay, they're not really, their moves are not really going to affect CoreWeave unless there's some type of news that talks about some big change in GPUs. You know, GPUs are going to be needed though, so that's not really super relevant. There's some, of course, some non-public competitors, but we can mostly ignore those because we're not in like biz dev or whatever. We're not trying to acquire these companies. Corporate, whatever it's called. Look, these are all sort of doing the same thing. I think EC2 is the big name that's been around for 20 years, but it's sort of accepted that the GPU workloads are not going to be sufficiently handled by these big companies. Plus, OpenAI doesn't want to just rely on these big companies. So with that NVIDIA investment, they're sort of signaling that NVIDIA can sort of serve them completely, which is pretty incredible. They might not even need to use Amazon. They are currently using AWS for some of their training, OpenAI, but they can cut them out. They can cut out Google Cloud. They might even be able to cut out Microsoft, which is the hugest move if they do that. Well, it won't really be cutting that out. Microsoft will take equity or whatever. So we'll be excited to see how that deal develops. But here's exactly what's happening, okay? CoreWeave did acquire Cores, and we did see that on the chart, okay? This was the news of the acquisition. It was sort of sell the news. I at the time did long that, which was pretty ill-informed. But you see I got out without many scars. So there was a big run up into that news though. So it is relevant that they're making these big moves to get the power in order to support the massive GPU power workload. So yeah, they do have contracts with OpenAI to this scale, and the $6 billion deal with NVIDIA, which I guess was about half as big, but it's not really relevant what this number is because NVIDIA invested in them as well. So this is a big number as well, 30 facilities across the US and EU. That's a lot. And of course, they're using NVIDIA GPUs. So yeah, corporate development, that was the word I was looking for. I do think that they are going to continue to, you know, be at the epicenter of this $500 billion Stargate project, as long as they keep under the warm umbrella of OpenAI and NVIDIA even more closely. I think they're going to be at the center of this whole conversation, okay? And this happened just a couple days ago as of this video time. So $100 billion investment in OpenAI that then OpenAI spends on NVIDIA chips. So this is all positive for CoreWeave. We looked at the chart. Yes, it went down a bunch, but it's an IPO. It's expected to be volatile. And then we just have to see, you know, what's the stock chart for Oracle looking like? And is there basically any one of these companies that's going to run away with the AI, you know, whatever it's called, whatever we're calling it now, super intelligence conversation? And that's sort of a, you know, rhetorical question, because I think the answer is, of course, no. The whole point is that they keep investing in each other, and you know, Meta went down a little bit on that NVIDIA OpenAI investment circle jerk sort of thing. But then look, NVIDIA sold right off again with the market. So we don't really have to look too granular on things like that, which, you know, seem like they're what we're supposed to be focusing on, because 100 billion is a huge number. But I think we kind of need to look at where people are not looking, and I think this is the spot to look, which is CoreWeave, okay? A company where it is much smaller than NVIDIA, but that's kind of the whole point. We're getting an opportunity to jump in early with really low risk, similar to what we talked about at the beginning of this video, like an offer pad where, you know, if you're wrong, no big deal, you know, you lose 50 cents a share or something, but if you're right, you know, you can get opportunities like this. So that's what we're doing on this channel. This is the ticker. This is the stock. That's the analysis from the street, literally, this Main Street situation we got going on here on this YouTube channel. If you like these ideas, if you want to talk about stock ideas, your stock ideas, head over to stockscommunity.com. That's stocks with an S, community.com. Try it out for $25 for 7 days. See if it's for you. You know, $25 could be one trip to CVS, a couple of drinks, one drink if you live in New York, San Francisco, Chicago, some big city. So head over there. If you join that, I'll see you there. Otherwise, hit that subscribe button, and I will see you in the next video. Subscribe button's right down there, and you'll get notified when I release a new stock idea. See you in the next one.
This is Sam Putnam.
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 All right, let's jump back to a little bit of a Chris Sane video for some motivation here.
What's up, YouTube? Listen, class is in session today. I got a jam-packed video like always, so please keep it locked. Please make sure you like, subscribe, help this video get at least 1,000 likes. And without further ado, let's go ahead and dive into it. Really quick, guys, a quick lesson on 3 green soldiers, aka no limit soldiers, if you rock with me. Okay, listen, man, in addition to making money, I want you guys to learn how to make your $100 to $400 a day. That's the standard. Okay, then you matriculate to $1,000 a day. This is going to be the hallmark of how you hit 100K with me, 0 to 100K for 2026, okay? But check this out. I also want you to set a goal like once a week, once a month, that type of deal where you catch 3 green soldiers. Everybody look at this, okay? Now, I want you guys to catch the 3 green soldiers. I'm going to teach it to you momentarily how to do it, okay? I want you to catch it because it's life changing. And then if you ever get a continuation off of it, it's game over, okay? I'm going to teach and show you both momentarily, all right? But look at this, because sometimes after, if you catch the top end of the green soldiers, it's going to what's called a retest. It's going to come back down to the baseline and then go back up. And so sometimes it can throw you off if you don't know what you're doing, what to look for. Okay, so look, everybody get familiar with this, okay? You got the hammer, you got some other stuff in here that I'll touch on later, even though it all will tie together. But the 3 green soldiers is how today you will make and turn $1 into $100, learning to catch this, okay? And then as you add more money, you can do some of the things that you see others do in terms of making bigger dollar amounts, all right? Now let's unpack this so I can show you guys really quickly. Everybody look at this, okay? This is APLD, one of the plays I got for you guys today, one of the plays that $1 turned into $100, okay? But really quick, check this out for me. Everybody look between 1444 and 1750, okay? 1444 and 1750. Just find those numbers to the far right for me, okay? I want you to look at that. Okay, that is life changing. But look at 1444. Look at my indicators and how we had support, hold up. Nothing broke down and came down below 1444. Like we didn't go down past 1250, if I can make it plain. Okay, if you learn to catch one of these in this type of pattern, look at the candle from 1980 to 2467. That is what I call a boom boom candle. That is the life-changing money that I like to take.
A boom boom candle.
When I say stuff
I like it.
30K in a day, 50K in a day, 100K in a day. When I say stuff like it don't take all day, when you become a master at learning to catch those, guys, you'll make up any losses you had. This is why I say I don't care about your losses. Because what I'm going to teach you and show you, you're going to be like, oh my God, I was finally in one of them plays. That's why you have to buy more time. What does buy more time mean, coach? That means you got to put your plays out 1 week, 2 weeks, preferably a month, okay? None of what I teach you going to take that long, but you need to buy time, okay, like 1 month out so that, like today, Donald Trump and Jerome Powell messed up my Tesla play. Okay, they crashed my Tesla play that was going to probably make 30, 40K today. Now, luckily, I make money in both directions, so Coach caught the put to the downside when they start crashing the market. So I made 10K to the downside, okay? But my point is, when you can know how to catch the 3 green soldiers and get the boom boom continuation candle, it's game over, okay? So, guys, add that for me as something you want to hit or achieve or accomplish on the journey, okay? You're going to see what I mean, all right? And so that's the lesson on that today. But speaking of those particular plays, we kicking it off with APLD. If you have made money with APLD, please let Coach know down below, okay? I try to tell you guys and show you guys and present these plays to you. Okay, I'm a technician, so you have to understand the lens that I'm seeing and presenting these things to you. In addition to what I'm going to teach you, I want you to see a technical perspective of how to get busy in the stock market, okay? You have to learn and master reading your chart so that you can do it consistently. Because if you just rely on me, yes, I'm here to teach you how to fish, but if you rely on me, you won't even know the rhyme or reason why we hit this play, why it did what it did, what did Coach see, why did he say a specific price over the other, little things like that. I want you to know the holistic viewpoint of why I have us do what we do. So if I ever start recording If I ever stop coming on YouTube, you know how to do this on your own, okay? APOD, if y'all made money, let me know down in the comments below. I want to say major salute. Now listen, the market is at all-time highs. These plays are at all-time highs. These plays, I done hit so many plays for you guys. Please don't let our good plays go bad. I don't want to hear nothing about, Coach, what's up with this? If it go down, you got to lock in some profit along the way. Somebody asked a real good question on Instagram this morning. And it was like, Coach, at what point should we take profit? I always take profit when I'm up 20 or 40%, or $1,000 to $3,000 a day on the low end. 10,000 is my regular daily amount I make every single day. 30,000 is the average if it's between 10 and 30. Okay, I'm always between that range. All right, sometimes it's three $10,000 trades, or I might just hit the whole 10,000 or 30,000 in one particular trade. Okay, and then if I'm feeling real good, or if I got the right conditions in the market, that's when Coach can do 50K in a day, 100K in a day. Stuff I have shared with you guys along the journey. Okay, but you gotta take profit, because at some point the plays will pull back. At some point they will come back down. All right, what else I got for UNH? Look at this one, guys. Remember, we got this at 268. All the negative news, I kept telling you they was going to push it down, push it down, push it down. I said, listen, guys, put this play out 1 year. Get this play while it's going down. I seen this game before. Sometimes, guys, they play the same movie. You ever watch a movie and you be like, man, I seen this. You ever watch, like, if you guys watch Jack Ryan, then if you go and watch Bosch, you're going to be like, man, these feel like the same shows. That's how the stock market is, guys. Like, a lot of stuff they do, they just mimic each other, okay? UNH was CrowdStrike last year, okay? I can't stress it enough. Real quick note for you guys that need to make some money into 2026. So, like, you got to buy time, remember? So you got to put your play like April 2026 for this. This will go to 450. Let me just say 430 to 450 from here, okay? So any pullbacks, you just make more money when it go higher.
I don't think that's crazy to buy UNH on a significant pullback. I don't know that I'd buy it up here. But yeah, that's not crazy to say that it'll retrace this. But it's not easy to, it certainly wasn't easy to buy. It took months for it to finally bottom, and it faked out multiple times. But let's jump into a little bit of a breakdown right here on a company that Apple chose. So here we go. Let's do that. This is the ticker, First Solar. And if you are in the stream, go ahead, drop comments, and we can chat over there. Otherwise, we will get rolling here on First Solar right now. There's one stock that is about to jump up. They have a collaboration with Apple. Apple chose them as the builder of a massive solar installation, one of the largest commercial solar projects in history. That was back in 2015, and again, they're at a very important level. The solar ETF is also looking okay, pretty good. But this company in particular, the ticker is FSLR, First Solar, is ready to go. So let's take a look at the chart and then jump into what it is they do compared to their peers in the solar. So here is the level right now, 220. It did sort of get slammed down today, but the market as a whole got slammed down today as well. So we don't have to get too worried about a single day here. That's why we're looking on a weekly time scale, and we can literally look on a weekly time scale here, zoom way out and say, this company basically is at an important spot, okay? $200 whole dollar level, a little bit above there, and then this 300, 306, 250 is the all-time high level, and then the next level to reach. So name of the game, before we get into what they do and the connection with Apple, is this company just keeps building. The revenue is sort of trailing off, and it continues to go up, which means there's not a lot of sellers. So here's the sort of level right now, 205, and then 220 right here is most relevant. So why am I talking about that? Well, because that's about as far back as we can go. When you go back more than 6 months, you're talking about people who already would have sold down here. So their overhead supply is not going to be significant. So if we zoom into 6 months, here's where we're basically looking. And that's important because if you buy it tomorrow or the next day, you can risk off of this level, risk $1, make 10, 20, 30. Okay. That's the whole idea here. And you can see there's not much volume traded over there, but we can just sort of see that looking at the chart as well. Now, let's jump into what it is they do so that we can feel a little better about what we're buying, especially if we're holding a stock like this over the weekend. We do want to make sure that it doesn't have a ton of dilution risk, or just it's not a biotech or something where news can come out, or if some type of trial can come out that completely obviates the need for the company to exist at all. So here's the connection with Apple. That partnership was back in 2015, 25-year power purchase agreement, and almost $1 billion, okay, 800 million. So it's a big deal, and they could have chosen a lot of other companies. They chose FSLI. We'll talk about those other companies in just a moment. And revenues over $1 billion. Here is the 10Q, and those are the revenues, and then that's the net income per share. But honestly, ChatGPT is so good that we don't really need to be financial analysts anymore. We can just look at what they provide because they're very good at taking up numbers. This is pretty solid to have a increased sales guidance. That's a lot. Revenues are only $1 billion, and then over a year that would be about 4.4 billion. So that would be an increase of maybe 10 to 20%, 10 to 30%, something like that. So yeah, it's optimistic. It's good. This is a problem. Okay, tariffs can be pretty rough. This is what's other companies doing as well, moving to other countries, which seems like they're trying to do that. And then solar tax credits have been helpful for solar. So that's positive as well. We can ignore sort of anything related to quantum, but I honestly think this has nothing to do with quantum computers. I was kind of just messing around there, but I don't want to get too deep in what exactly this company does, because this is really what we need to do, is just say, here are the other tickers, and then, what are these other tickers doing on the chart? Enphase, Sunrun, SolarEdge. Because if we get too married to what exactly it is they do, then we're going to buy stocks that are all the way down here thinking they're going to bounce, which that's not good investing hygiene. So SolarRun is still kind of holding up. Move down with the market. You can see the market in the overlay on the background. It's kind of mirroring it there. So wouldn't get too worried about that, but I also wouldn't necessarily start a new position there. And then Sedge is the other one, SolarEdge, which looks pretty good. Kind of a place to buy it here, but it's also kind of choppy. So I guess this has to be the way to play it. First Solar has a lot of compressed days. It's 4% average daily range. This is 7%. So, if you're more aggressive, you play the higher ADR names. You don't have to play ADR names with a 15 like Open Door. You don't have to get that aggressive. But I think this is a sort of good balance of opportunity to the upside, while also you're not going to get completely hosed if you don't check your phone or your broker, your 401k for a few days, and you allocate some percentage into the stock. So that's the comparison. Again, sort of purposely just glossing over what these companies do because I don't want to get too embroiled in what they do, even though it's interesting. It's endlessly interesting. There's solar in my backyard right now, but Tesla obviously just had a huge run and is actually holding up as well. And that even though Tesla is sort of, distance from these companies, it never hurts when Tesla's pumping. So I think that does actually matter to some extent. And then as far as investors, there aren't really any insiders. There's not a lot of shares that can be dumped to dilute the float, so that's good. You don't want the number of publicly available shares increasing a bunch because insiders sell out. Because not only does it signal decreased optimism in the company, right? It also means the supply is much greater, so the price can go down. And then here are some positive activities. That's a lot, 350 million. And then these are kind of, that's, what is that? 30,000 times, what is the stock? $200? Yeah, so 60,000, 600,000, $6 million worth. So it's not nothing, but also we can kind of ignore some of these when they're small. So all we have to really say is it's a stock that is real. It's over $1 billion revenue, and they're profitable. So, and they have a bunch of cash in the mid hundreds of millions. So sales backlog as well makes them sound like some sort of AI infrastructure company. They're always talking about the billions of dollars of sales backlogs. In solar, they talk about gigawatts. So that's a lot. Gigawatt is a lot. And we don't have to look about these numbers too much because we're not trying to hold this for months or years. But it does help to say, even though this tariff thing hurt in April and First Solar followed basically the entire market down in April. Well, it rebounded in April, but followed the market down and then came back up about 80%. So nothing crazy. There were companies like Netflix, went up 70%, which is huge for a company that size. Or I guess there were some extreme companies as well. Apple Oven is an example of a company that has gone up 200%. But all things considered, First Solar certainly rebounded, so we don't have to worry too much about the tariff talk. And as we said, or as we saw, they are showing signs of adapting to that. So all we really want to do as sort of dilettante investors is say, hey, chart looks fine. We got a spot to get in. We talked about that. Risk $1 down to this left side peak. Make a lot more. And there's a good opportunity there. It's the best stock idea I can think of right now, along with, CoreWeave and QUBT. So as of the time of this video, I can't really think of any more than 3 stocks that are worth watching. Those are the ones that are most important. Because look, if you look at Oklo, this thing's going to trail off. Nuclear went crazy, it's going to trail off. If you look at uranium stocks, it's going to trail off. You went crazy, they're going to trail off. And there are speculative names, PGen is a low price speculative name. And there's also QUE that people are talking about, but these are not the kind of stocks that I think are worth getting into as a mid-term to long-term investor. Unless you deeply understand biotech, a Huntington's disease candidate that comes out that 4x is a stock with one trial result, that's just not in my wheelhouse. So all that to say, this is the stock. If you like discussing ideas like this, stock ideas, head over to stockscommunity.com. I tried out for $25 for 7 days. See if it's worth that. $25, what's that? Half a tank of gas. So give it a shot, see if it's for you. And if you haven't hit that subscribe button yet, hit that down below, and I will see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.